The paper economy is about to burn. Hey everybody, my name is JJ. You're watching Bullet Boom Bear Bust. Today is Sunday. It's May 2nd, 2021. Thank you for joining me on this broadcast. Now, many would argue that the paper economy is already burning. So we're going to talk about rising prices, where things may be headed, how this may impact us, how we can try to brace for the storm that's ahead of us, and in this case, the burning of the paper economy. Now, first, real quick, thank you to those that wrote to me to my P.O. box. I'm not able to send you back an actual letter, just don't have the time to type it up, envelope, stamp, go all that stuff, go to the post office mailbox. So if you leave your email in a letter, I'll try to email you back. Now, there's one letter I had, I read it, but then I put it in a stack of mail and I can't find it, so I apologize. You're from California. I'm going to try to get to you. I'm still searching for this letter that I know is around here, hoping it didn't get thrown away. So if you wrote to me and I didn't write you back, you know who you are. I will continue to try to find it. If I don't, I will leave you my email and maybe you can type up an email to me here. So thank you for writing, and again, I'm sorry I didn't get back to you. Still looking for your letter. Also, for those that have emailed me that haven't gotten a reply, I don't really check my email anymore. It's just too much. You know how it is. It gets filled up with spam, and you got so many people sending you stuff that you just don't have time to go through it all. But thank you to everyone that's reached out to me and given me support, feedback, or even asked me questions. I apologize again. I may not have gotten back to you. Now, on this channel, we talk a lot about the cost of living and how everyday working people are going to have a more difficult time going forward, especially if you're not investing and trying to take advantage of these rising prices and the inflation and the asset bubbles that we've seen in many different areas. So people playing stocks and other digital assets have done very well. Even metals have done pretty good, not as good as some digital assets, but pretty good over the past, especially last few years. But people that are not investing and that are on fixed incomes are the ones really having the most difficult time. People on Social Security, you're not getting a very big raise in your Social Security each year, maybe 1 or 1.5% if you're lucky. But recent article here, CNBC, attention shoppers, price hikes are ahead, but consumer companies hope you won't notice. And we've been having this discussion a little bit more recently because we've seen inflation happen now much more noticeably. And some people say you're not really seeing it, but most of you saying that you're seeing it in the items and goods that you have to buy on a daily and weekly basis. And the places that have fixed prices like the Dollar Tree, 99-cent store, what I've been noticing is much smaller package sizes. You may not notice it from now versus next week, but over the years, I've definitely noticed smaller sizes. But here's a couple more here. Procter & Gamble and Coca-Cola became the latest companies to announce price increases are coming to help offset rising commodity prices. Right, so rising energy costs, rising goods and materials, and raw materials are all rising. So this is going to impact us in several different ways. The companies that depend on these items and even transportation costs, or we have energy costs there, are going to be raising their prices. On top of that, you have all the spending where incomes now, according to the data that came out in March, incomes broke an all-time high record because they're paying people all these benefits and programs, all the stimulus checks and other benefit programs. They're paying people, and that's counted as income. Now, you can argue that that shouldn't be counted as income, but the bottom line is people have this extra money to spend, and it's going to cause more demand, and prices are going to go up. Look at car prices, home prices, right? You have all this lending and money flowing into the economy, right? It's only going to create rising prices. The only thing to stop prices from rising is to pull the plug on the money printer, and we don't see that happening anytime soon unless something unintended or unexpected happens. All right, but it goes on to say here, most retailers will pass on the higher cost to consumers who might not even notice the difference because of the savvy methods deployed by these companies. And there's a chart in this article that gives us some categories. Grocery up 2.5%, household care over 5%, baby care items, those buying diapers are really feeling this one here, 7%, general merchandise over 7% as well. Now this is interesting because we just talked about this in our last video, maybe 2 videos ago, about smaller package sizes, but this article lays it out right here. Companies are becoming more savvy on how they're raising prices. Let's go down into this article. Price hikes get stealthy. Consumer companies across the board have gotten very savvy about how they implement price increases without just slapping on 5 or 10% to the price. And it continues. Some of those methods include using new packaging, selling smaller size packs for the same price, or they offer promotions that bring the price down until the consumers are used to the higher sticker price. Right? Many of you may notice that they'll say something's on sale, but really all they did was raise the non-sale price. That way they can say it's whatever, 10, 20% off. Right? It also goes on to say more cash in consumer pockets means less risk. Companies know that all these checks and stimulus checks have to go somewhere. All these extended unemployment benefits. Also, a lot of people that cashed out their investments that went up have that money and a lot of them are spending it. Home equity, stocks, you name it, all these rising prices, all these asset bubbles. A lot of people are cashing out, and that's even more money into the economy being spent. Now, when it comes to spending from the government side, a lot of people do pick sides, but I really like this tweet out of Jesse Colombo. And it says here, do not put your trust in princes or in mortal man who cannot save. And it shows a picture of the left and the right here, both buttons being pushed, and both are mass spending. And this is America. All right, and I think we've outlined that pretty well here, that no matter who's in power, it's to keep this illusion alive, to keep this paper illusion alive, it's going to require more and more spending. And that's what both sides do. Anyone thinks that there's actually a conservative side that's bent on reducing spending is just being silly at this point. If you haven't noticed, it's all about spending and lending out money and pretending things are good. But in the end, it's going to be more and more spending just to try to keep the appearance of normal, and the paper economy is going to burn even more noticeably here as we continue this outrageous record spending. And it's to the point now where they don't even try to hide it. Here's a recent Post article. White House officials urge spending plan to offset recession. Does anyone think that more spending is really going to offset recession? And if you ask about 50% of the people right now, the bottom 50%, the recession's here and it's noticeable. Remember back in 2008 when the housing bubble finally imploded, people were freaking out about an $800 billion bailout. And now it's multi-trillion dollars packages and spending, and nobody blinks an eye. It's like no big deal now. Right? So get ready, folks, because their solution is more of what the problem is. The problem is rising cost of living, out of control, rising prices. And if you're not investing, you're going to get left behind. And the money printing madness is just getting started, in my opinion. So we all need to get ready and prepare and brace what's ahead of us, because it's going to be pretty hellish if you're in the wrong position. Now, speaking of debt, student loan debt has been a big hot topic. And here is a tweet there recently from good political guy, Mac. And it's a little bit graphic, so hopefully you guys don't report me or anything like that. It's just a cartoon, so I know a lot of people love trying to get people in trouble. He says, quote, if you cancel student debt, it would be unfair to people who already paid theirs off. And here's the example that they give from this drawing. So the trolley ran over these people. Now they didn't die. Okay, they're just injured. There was nobody in this. It said, would it be fair to the people the trolley has already killed to divert it now? So basically the example here is all these people are trapped in student loan debt. Would it be fair to divert the trolley by forgiving the debt for these people, or because these people got trampled by debt, do we have to allow these people also to get run over by debt? All right, so people, do you agree with that? Do you agree that we should forgive student loan debt for current debtors, or should we not do it because the people that paid off their debt and worked hard and maybe worked 2 jobs to pay off their debt, it wouldn't be fair to them to forgive these other people? Let me know what you think down in the comments, but I can see both sides of the argument. More on rising prices and inflation, Pierre Poilievre, I'm not sure if I'm saying that right. Maybe Pierre Poilievre In any case, commodity prices are up 50%, real estate up 38%. 3 of 4 Banks of Canada measurements show consumer price inflation above target. What's the government's solution? Print more money. So he's talking about Canada, but it's the same here. It's the same in most countries. We have the infinite printing press in the background. And it shows soaring prices. Bloomberg's gauge of commodity prices has gained more than 50% in the past year. Now we're going to end this video right here with the tweet, and it's a couple minutes. I'm just going to go ahead and let it play. This is out of James Anderson over at Twitter. I'm not sure if he created this or if he just retweeted it, but either case, I'm just going to go ahead and link to him down below here. And it says, Jay's Moondance, talking about Jay Powell and why you should own silver. Let's go ahead and let it play.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally. So we as a central bank, we have the ability to create money.
The wife of Pete Peterson, one of our leaders, is saying, watch out for the debt, watch out for the debt. And now we're out to trillion-dollar deficits. When do they really affect America?
Sooner rather than later.
Better get that money.
You can't jump into cash. Cash is trash, okay? Cash is that they're going to, because they're going to print money. What do? You get out. What do? I think that you have to have a certain amount of gold in your portfolio, or you have to have something that's hard.
Providing liquidity is a nice way of saying it. What they're doing is they're creating inflation. They're just inflating. They're monetizing government debt, and they're buying assets with the money that they create out of thin air to enable massive U.S. government spending. In fact, the U.S. government is spending more money that the Fed prints than it collects in taxes.
$US in the system. 1 year later, that number is at $6.7 trillion. Meaning that over 40% of all U.S. dollars were printed in just the last 12 months.
Where do you put your money? What's the number one conviction trade right now for you?
Silver.
Silver.
Silver? Why not gold?
Because when you look at the relative values of silver and gold, silver today is about, let's say, 65% below its prior peak. Gold is getting very close to its prior peak.
Can it go exponential like we've seen in some of the non-precious metals?
I think there's a high probability of that.
So we heard from a few different people in that clip right there. People like Peter Schiff, Scott Menard, Ray Dalio, who said cash is trash. And you heard, I believe it was Scott Menard, saying that silver could go hyperbolic. Right, so continue to hedge yourself. Get ready for this storm. The paper economy is going to continue to burn. Hope everybody's well. See you next time. Come back for more. Please like and subscribe and come back for more broadcasts. And see you then. Thanks, everybody. Bye for now. Peace.